Okay, so Jeff Tesch has been a sponsor for a long time. They're one of the largest. How many guys do rehabs here? Raise your hand so I can see. Rehabs. All right, good. All right, look, these are, certainly one of the go-to people in the industry. They're very loyal to Pitbull Conference. They're part of our inner circle. They're part of our whole inner workings. See, I say all this to make sure that they come back for the next event. And because if you're part of the inner world, you obviously have to come back to the next one. Anyways, these are good guys. Jeff is one of the most knowledgeable guys I know in the rehab space. Give a warm welcome, Mr. Jeff Tesch, please.
Thank you very much, Leonard. Really appreciate it. This is our 5th or 6th year running now with Pitbull. 6th year running with Pitbull. And, it's interesting. We came here looking to get knowledge in the beginning. Our company was formed back in 2010, and we were like a lot of other folks that are here today, which is small business people that wanted to understand on how to build a business. But something interesting has happened along the way. And I really, if there's one thing you take away today, just remember this. It's the relationships that the Pitbull Conference fosters that will help you build your business. There is no small relationship that is born today. You don't know where it's going to take you. And I can tell you, we have friends all around this room that have become more like family over the years. So just meet as many people as you can and make the most out of this day. So away we go. About a year ago, Leonard came to me and said, Jeff, rehab is exploding. I want you to get up and give 20 minutes on the secret sauce on how to be a rehab lender. I said, okay. All right, Lenny, 20 minutes. You got it. So this is how it was really all born. We developed this presentation to take you through everything that we learned along the way in building RCN Capital, better known as Rehab Cash Now back in the day. So from the inception all the way through to today's exploding marketplace is where we're going to take you today. So the key points. We're going to start right from the beginning, planning your business, the company reach, loan programs, the all-important process. Everyone should have a process. Qualifying deals, supporting documents, underwriting, closing procedures, and establishing your reputation. All right, here we go. So you want to be a fix and flip lender. Well, there's no shortage of fix and flip lenders out there today. Back when we started the company in 2010, the residential marketplace was a mess. Foreclosures everywhere, short sales everywhere. Valuations were next to impossible. But what we did see was an opportunity. Private money was the only answer to all of the investors and contractors that wanted to go out and acquire these assets. Private money was the answer. And that's really how we focused our original development from the beginning. In order to set your own business up for success, you need to think about what you're going to focus on. And that's what we're going to take you through today. So most folks start out local. That's how most folks start out in the rehab lending business. However, you do have a choice. You can come into the space as a broker, set yourself up as a fund, and be a national lender right out of the gate. But what this slide is going to do is going to kind of contrast what the two options are. So let's start on the local side. Most local lenders And there's a tremendous number of local, hard money, private asset lenders that never go 100 miles beyond their base of operations. And there's nothing wrong with that. They're local, they know their marketplace, and that's great. But even when you're local, you want to hire an appraiser or have an in-house appraiser to get a value on that property. Now, if you're going to be doing disbursements, as many rehab lenders are, if you're local, you do them yourself. It's only 100 miles. You get in the car, you go out and meet your customer. You say, okay, what have you done so far? The reason I bring this up is it's very important that you perform the inspection. It's not okay to have your customer, Joe, email you a few pictures and say, hey, can I get my next draw? And there are lenders out there that do this. I would advise against it, because what you're missing is what you don't see. If you're a local lender, you're going to have much more familiarity with your own marketplace. And that's what's really important when you're getting the business going, because you really can't afford mistakes. Going back to what Leonard was talking about, as well as John, you can't afford to miss payments to your investors. So you have to be on your game from the get-go. Now let's flip to the other side. And this is, say you want to be a national lender. So you're going to originate loans across the country. Okay, you can start out with that platform. Nothing wrong with that. Be aware of state licensing requirements. John touched on this multiple times. Don't just say, well, I'll make one loan. It's not a big deal if I need a license. That's a sure path to destruction, because that one loan won't pay you back, and then next thing you know, they're calling the banking commissioner. Just get the license. Partner with a strong appraisal network. Now, even when we were a local lender at RCN, we really weren't going that far away from our home base, I always used an AMC. RCN Capital, our relationship with Appraisal Nation goes back 5 years now. They're who we've chosen to partner with, mainly because they listened to what the hard money lender needed. We tried other AMCs in the beginning, and they all said, well, you've got your residential, FHA, BIF, what? I don't need any of those forms. I need to know what the value of the property is today. I need to know what the value of the property is when my customer fixes it, and that's how I determine my underwriting. That's why we partnered with Appraisal Nation. Now, inspections, once you go out beyond your 100-mile area, you're going to need to partner with an inspection company. We use a company out of California called CFSI. They guarantee us an inspection from ordering in 48 hours. Once again, the name of that company is CFSI Inspections. They're out of Southern California. We vetted a few, but what we found was this particular inspection company had hard money lending experience. They understood what the lender needed in the fix and flip space. The point of all this today is getting you folks to think about the different decisions you make when you're building your business, because the groundwork you lay in the beginning will allow you to scale. Everybody wants to scale, whether you're selling sandwiches or selling gasoline. Everybody wants to sell more. If you lay the foundation in the beginning, you'll be able to scale much quicker. And then as far as national goes, keep current on market trends. John's slide today on the different geographic regions and the different interest rates was really on point. And he's right. RCN Capital can get 14% in Ohio. In California, I'm lucky to get 10. It's just the way it works. So make sure that you do your research and price your product appropriately. Okay, so let's talk about loan programs. I just touched on this. establish your rates by lending area, whether you set up a national map or maybe even a local map. We're out of Connecticut, so I can relate to the Northeast area most easily. Some areas in the city, I can only get 10%. But if I go up to Westchester County, I might be able to get 12. And it can be that geographic sensitive. So be very aware of that. Don't leave money on the table. And then set the terms for your rehab projects. And what I mean by this is, when the rehab budget comes in and you see the scope of work, and I'll get more into the different documents that you're going to need to collect, but when you see the scope of work of what your rehab customer is going to do, make sure that you allow enough time for them to be able to complete that rehab. LTV, well, that goes without saying. Make sure you know exactly what you're doing with your LTV. Don't be too aggressive just because somebody else is. And then the collateral property type. When you're setting up the basis of your business, you don't have to lend on all types of properties in the fix and flip space. You could just do single families, or you could just do 1 to 4s. At RCN Capital, that's all we did for years was 1 to 4s. But as we got bigger, more requests came in for small apartment buildings, and we branched out into that. But it's important that you set your criteria with reasonable expectations from the beginning. Okay, important slide. Process. Even if it's just yourself and a couple of employees, and you've been doing things the same way for a long time, but you want to get bigger. Maybe you've started a fund. Maybe you've acquired a capital line from one of the capital partners that are here today. The first thing they're going to ask you is, what is your process? And it should be documented. And even more important than it being documented, you should actually follow it. You shouldn't be making various exceptions just because. Follow your process. So this is the way we do it at RCN. It's been pretty successful for us. So we start with pre-qualification. And what that means is your phone will ring all day and it will be people running scenarios by you. And all day long, it'll either be you or one of your team members saying no. Because all day long, people call us up with loans that we are never going to do. Can I see a show of hands on people that spend the majority of their day saying no to silly ideas? Yeah, quite a few. And that's just the nature of the business. People have dreams and they have all these sort of ideas. It's just never going to happen. So, pre-qual. At RCN, once we got a little bit bigger, it was very important that I established a permanent person to weed through the nonsense. So when you're thinking about scaling, that's one of the quickest ways that you can save time and money, is to put somebody on the intake role who just gets rid of the nonsense. That way your loan officers that are actually negotiating the deals aren't dealing with the nonsense. Come up with an application. Doesn't have to be too detailed, but you should have an application with all the pertinent data. You can go to rcncapital.com. Our application's right on there. You can steal it. It's fine. All the pertinent information that you need to be able to underwrite the loan. And then the various documentation that you're going to need. You're going to want to collect that. And very important, have a signature line on the bottom of your application and have them sign it. Because as John pointed out multiple times, all the customers lie, and that couldn't be a more true statement. So when they lie and you go to foreclose on them, you have an application with their signature. And you say, Your Honor, he told me this, this, and this, and he signed it. It's the most damning thing that you can do. Underwriting and due diligence. So once you have all your pertinent documents collected, and we'll go into some more of what we collect at RCN, you want to underwrite them. And even if it's just yourself, you should have a formal process of weeding through the documents. You want to look at the value, you want to look at the appraisal, you want to look at the rehab budget, and whether or not with that amount of money, the borrower is going to be able to sell the property for a profit. If your borrower is not going to be able to sell the property for a profit, don't do the loan. And you may get properties where the borrower is putting down a ton of cash and it's a 50 LTV and he's not going to make any money. And you say, well, hey, I'm getting paid. Don't do the loan. You'll do the borrower a favor and you'll do yourself a favor when the borrower comes to you and says, I didn't make any money. Can you help me out? Because it happens all the time. And then loan confirmation closing checklist. We use an outside attorney, and that's where they get involved. They'll go through a closing checklist of all the appropriate documents. And then finally closing and post-closing. So you're going to get those documents back. You're going to secure them in a safe place. As many of you know, and those who you don't know, you need to save that note in a place where it will never be lost with a real signature. Very important. So how do you qualify those deals? So you've thought about how big a operation you're going to start with. You've thought about how you're going to get started, where and when. You've developed your process, and now it's time to start qualifying deals. First question, and the most important question for any asset-based lender is, how are you going to pay me back? As John stated in his excellent presentation, the borrower does always get the better deal. Exit strategy is everything in private lending. And it's really important that you get a handle on this from the beginning, because what you don't want the borrowers to do is saying, well, I'm planning on holding this property for rental income, but if that doesn't work out, I'm going to sell it. Well, what are you doing? What are we doing here? Are you holding it for rental income? Are you going to go through the process of getting a takeout with a conventional lender when you have a 535 credit score? Or are you going to flip it? Because if you have a 535, you probably aren't going to get a loan. Doesn't mean a hard money lender doesn't want that as a fix and flip, but you certainly don't want the takeout to be with a conventional lender in that case. So, exit strategy number one, details of subject property. You want to understand what the property is. Have the borrower tell you what it is that they're buying and how they're going to fix it. Skin in the game. This gets used all the time. You'll hear it multiple times across the day. At RCN, 20% down. We'll fund the full rehab, but we want your money. We will cross-collateralize if you don't have cash and you're equity rich, but get the skin in the game. And there are lenders out there today who have gotten away from that, and it's going to be unfortunate when it unwinds. Use of proceeds. Make sure they explain to you what those use of proceeds are for. Mainly, a pro forma of exactly how they're going to fix the property. Appraisal Nation and RCN Capital developed a very, very detailed rehab list with blank spaces for everything that you can imagine. What we wanted to do was we wanted to formalize it in a document that we could email to every borrower and say, here you go. Now you might say to yourself, well, what did you need the appraisal company for to develop that? Why didn't you just develop it yourself? The reason we developed it in conjunction with Appraisal Nation was we take that document, it comes back to us, and then when we order the appraisal, that document goes off to the appraiser. The appraiser now knows exactly what the borrower is going to do to that property and can assess an accurate value of what the rehab property is going to be worth. Very, very important. Experience and background. We do at RCN Capital loan to first-time flippers, but the more experience, the better. Market saturation levels. It's pretty hotter across the country right now. I mean, most markets are going pretty good. There are some areas that do have over 90 days in the marketplace on the MLS. Just keep an eye out for that. And then cash reserves. I mentioned the guy with the 535 credit score. Well, if it's a fix and flip and he's putting 50% down and he's got all the money for the rehab, Cash cures all sins. You don't know where he got the money, most likely from flipping. It's helpful if you could ascertain where he got the money. A lot of lenders don't. What we do at RCN is we require a letter of explanation for whatever that's worth. Who knows really where the money comes from? But at the end of the day, if you can lock up that cash in the deal, cash reserves are critical. Okay, supporting documents. So here are some of the documents required at RCN. We get a personal financial statement. So yes, they fill out an application and sign it. Then we send them a very simple personal financial statement. Just says, what do you own and what do you owe? What's your net worth? Tax transcripts. We take things to another level at RCN with the tax transcripts. We require a 4506T form. It's a one-pager. They fill it out and sign it. We send it off to the IRS. They send it back and they tell us that they filled out their tax returns. It'll also tell us the bullet points on what they claim they made in the past. Very helpful to weed out fraud. That's a 4506T form. Subject property appraisal, we've discussed that. Background and credit report. Now, listen, there's hard money lenders out there that don't run background and credit reports. That's at their own peril. I advise everyone to run a background and credit report. You don't need to set a minimum FICO. We don't. We have no minimum FICO. But what I want to know is the borrower paying their bills today? And if they didn't pay their Macy's bill last month, not somebody you want to lend to. Very important. Oh, and background? You'd be surprised what comes up on people's backgrounds. Proof of funds. So we require 3 months of bank statements. Just want to make sure they have the money. Once again, large deposits, we require a letter of explanation just so that they put it out there where the money came from. Pro forma, very important. Needs to be detailed. Number one, so that you know exactly what they're doing. And number two, so that your valuation model will help you be able to figure out whether they're not going to make money or not. Because if they're putting too much money into the house and they're not going to make money, you need an appraiser to be able to tell you that. Articles of incorporation. John mentioned this on several fronts. We only lend to corporations, LLCs. Don't make the exception. It's not worth it. Cost them nothing to set up an LLC. There's no reason they can't do it. So, underwriting. The all-important due diligence. This is and once again, even if you're just a single lender shop and it's you and all by yourself, it's important to have an underwriting process. You want to make sure that the borrower and the lender are on the same page and that the deal makes sense. You want to make sure the borrower is making money. Typically at RCN, we like to see at least a 15% profit. In California, it's less. But across the US, we like to see 15%. If they're not making 15%, you need to have a heart-to-heart with the borrower. Say, this property may not be for you. Or the borrower goes back to the seller and says, I'm not going to make any money on this project. You need to reduce your sale price. And you'd be amazed at the loyalty you will have from that customer when you tell the customer you need to go back to your seller and reduce the sale price. That customer of yours will be indebted to you, because what's going to happen is they're going to go back to the seller, and more often than not, the seller is going to reduce that price, and you just saved your borrower thousands for doing absolutely nothing except doing the right thing. That's your customer for life. Perform an in-depth review of the documents. Just make sure they're valid. You know, if you're going to collect tax returns, match them up to the 4506T. Make sure everything is above board. And then stick to those guidelines. If something isn't right, doesn't smell right, doesn't seem right, pass on the deal. There's plenty more. Okay. So now we've made our way all the way to closing. Engage the best legal counsel to ensure smooth closings. Now, as lenders get bigger, this is a function that they will bring in-house at some point. In-house attorneys and do the closings in-house, which is fine. But the small lender, for purposes of our discussion today, should use a counsel to represent you. Whatever fee you negotiate with that counsel, make sure they know what they're doing. And make sure that they're a hard money closer. Not the family friend that's been doing residential closing for years, comes to the summer barbecues. He's a nice guy, but not your hard money closer. Find somebody that is a commercial. Remember, it's residential properties, but these are commercial loans. You want an expert in that area. Hornick's okay, but I'm sure there's better. And John mentioned title insurance. Listen, the customer expects to pay for it. Just get the title insurance. At RCN, we have many claims, and the claims are silly ones, like a lien doesn't get released or somebody didn't do something that they were supposed to do, but we're covered. Always use title insurance. Judicial versus non-judicial states. You know, there's a lot of different component to this. In the judicial states, we always have an attorney representing us at the closing table. In addition, John mentioned the all-important opinion letter. It's really important in judicial states because it's another document that you can bring to the foreclosure. So let me give you an example. The scenario will work something like this. Your borrower, for whatever reason, has decided not to pay you. You're in a judicial state, which means they've got all sorts of time and the law on their side to be able to not pay you. And I'm not talking about months, folks. It can be years in judicial states. It sucks. It sucks bad. So, at RCN, what we did is, it doesn't make sense to go through the cost of an opinion letter for smaller loans. But even on the single family fix and flip, on loans over $250,000 in the judicial states, we require the borrower to go hire somebody, usually an attorney, but sometimes title companies will do it, and write an opinion letter with their malpractice insurance attached saying that everything we're doing today is legal. So that's one less defense that your customer will have against you when it comes time to foreclose. You'll go into court and they'll say, none of these documents are legal. This is a residential house. I moved in right after No. I have an opinion letter right here, Your Honor, from such and such stating that all of these documents are valid. So now you're closed. Congratulations. You've made a loan. Hopefully they're going to pay you back. You're building your business. Reputation is everything. And once again, in small business, it really doesn't make a difference what you're selling. Doesn't make a difference if you're selling sandwiches on Main Street or mortgages. Your reputation is everything. So let's talk about some of the pitfalls in the private asset-based lending world that happens. Avoid junk fees. At RCN, especially back in the day, there's not as many lenders doing it today, but junk fees were just rampant, back in 2011, 12, 13, and you can destroy your business in a heartbeat by saying, okay, we're ready to underwrite your loan, Mr. Jones. Can you please send us the non-refundable $1,999 fee that will credit to you once we close? Unfortunately, those lenders never close. And you will destroy your business by charging those sort of outrageous fees for doing nothing more than reviewing a deal. We talked about no with Mr. Hornick. That's all we do. We say no all day long. No funds, no commitment. Your borrower has to prove that they have the money. So what you don't want to do is issue a commitment and then not have the due diligence to back it up. And what I mean by that is, if your borrower doesn't have money and you issued a commitment and then they never have the money, you're really the bad guy because you didn't check. Give realistic time frames. Don't tell the borrower you're going to close in 5 days if there's no way you're going to close in 5 days. Be very specific about the timelines. Now, all sorts of things happen, right? There's clouds on title, things don't work out, but be honest and upfront. If you tell your borrower something, try and follow through. And then walk them through the process. Tell them, we're ordering an appraisal on this day, we're expecting it back on this day, we're ordering title on this day, we're expecting it back on this day, and then we're going to close. They will appreciate that candor, and you'll have a customer over and over and over and over again. So, a little bit about RCN, and then we'll wrap it up. And if there's any questions, I don't know if, well, looks like I might have a minute for questions. National Direct Private Lender, we were founded back in 2010. As Leonard pointed out, we're a leader in the fix and flip space. Over 1,600 transactions and growing. We have a current portfolio over 120 million. We keep all our own loans at RCN. We don't sell them off. We love to service our own loans. We feel it is much better communication with the borrower. We have a tremendous amount of our own equity in the business, which makes us make really good loans. That's it. Any questions? Come see me at the booth. Thank you very much.